In this video, we will apply the E or expansion tool, the R or regression tool, and the time tool to the swings in the new trend that started on November 26th. Remember that the ultimate purpose of Hurst book was to generate the greatest possible number of trades in the shortest time. And that too is the purpose of the Trading Fives Hurst method. And we accomplish that by applying the one dominant cycle to the time period we trade in. And we determined from the earlier videos that that was 68 periods for the S&P 500 hourly chart. Now I've made frequent references to the concepts of trend, swing, and counter swing because I think that's the key to trading successfully with the Hurst method. The simplest trading strategy that you can employ using the Hurst method is to trade only the swings in the direction of the trend. The maximum profit would then be obtained by entering as closely as possible to the beginning of the swing and exiting as closely as possible to the end of the swing. In other words, the world begins and ends anew with each swing. With the chart on the screen and looking, forward in time from the November 26th low, we have one bullish swing complete, a counter swing complete, and a bullish swing underway. Okay, let's go through the three tools starting from the November 26th low, so we can see them in practice by first applying them to the already completed November 26th swing and the November 30th counter swing, and then projecting them forward to see what kind of action we can be looking for in the swing that's underway. We like to work with really two moving averages, so we're going to clear the screen and plot two. Go first to the E tool. The E tool is used to project prices from the start of a swing. So we click at the November 26th low, move to the intersection of the moving averages within the swing, and click again. And that gives us a price projection. So we know that at some time between November 26th and November 30th, while the swing was in progress, that you would know that the 1486 price area was a level where you would look for the swing to hit the wall. Alright, let's apply the time tool. Click on the time tool button to activate it. Now, working off the November 26th swing, go back to the first intersection of the moving averages immediately before the swing started, left click. Move past the swing start to the first intersection following the swing start, and left click again. And then move to the start of the swing and try and get the cursor as closely as possible that you can to the bar, low or high as the case may be, and click again. And a yellow circle will plot on the screen, and what the yellow circle represents is a high probability price and time zone that we would look for the swing to hit the wall, which means either reverse or consolidate, but we're looking for a loss of momentum. Before we move on to the counter swing and the new swing, let's review two principles of the Hurst price motion model. The first is the displaced moving averages are fairly estimating the trending and cyclical components of the stock prices. And this is the principle from which we can derive the value of the one dominant cycle. The second principle is that the displaced moving averages of the one dominant cycle will almost always intersect precisely at the midpoint of an up or down swing. And this is the principle that we use applying the E tool, the R tool, and the time tool, because if we can accurately project where the intersection of the moving averages will occur in the future, then we can use that information to successfully project a price and time zone where there's a high reliability of the swing coming to an end or consolidating.